While South Africa moved to level 1 of the coronavirus lockdown in September, allowing for broader economic activities, many other countries are facing threats of a second wave of infection. With the financial impact of COVID-19 and the subsequent lockdown on businesses, families and individuals, as well as the many jobs lost, it is important to understand how to safeguard against further financial constraints if we face a second wave of infections in the future. Joining us to tell us about the possible options for some form of security for future occurrences is CEO of Sirago Underwriting Managers, Martin Rimmer. Martin, thank you for your time and thank you for joining us on Weekend Dawn, Channel 405. So how can we prepare ourselves better and our pockets for a possible second wave?
Good morning, Jacob, and good morning to everybody else. Yeah, I think it's important that people just assess their circumstances and see what's available out there. Insurance, as it's by its nature, is to insure against a possible future event. And that is something that we think is an important aspect of everybody's financial planning needs going forward. And hence we've brought out a product that can maybe help some people in terms of just trying to mitigate some financial risks in the event of a hospitalization event as a result of this COVID-19.
What about people like informal traders or business owners who have been hit hard by the pandemic? How do they safeguard themselves now that they don't have insurance or even any sort of hospital cover, never mind a solid income? What happens to them?
Yes, unfortunately, Jacob, circumstances like that are beyond the control of most people. And in the environment where we participate at the moment, there's opportunity via an insured solution. But, and again, we've brought it out on the basis that, it's for the self-employed, the commission earners, the people that actually are slightly more entrepreneurial and drive their own buses. And simply for that, the reality of the world is that if you don't have the wherewithal, you need to make sure that you provide for the wherewithal, that rainy day. And I think it's become very evident during this lockdown that most South Africans actually don't have the ability to save for the future. We haven't taken the opportunity to save for that rainy day, and it's become very evident during this lockdown, particularly with the loss of income and the loss of livelihoods, and we've seen the consequences thereof. So, that's the reality of the world, and so I can just, from my side, just reiterate the absolute necessity for people to future save for that possible rainy day.
Let's talk a bit about the European trends at the moment. There's imminent possibility of them going into a lockdown as their second wave is hitting in many European nations. Should we be taking tips from them as to how to deal with a second wave?
Indeed, Jacob. I think now that we've opened the international borders as of the 1st of October, I suspect that we might be exposed to a second wave come sort of December, January, when we start getting sort of masses of tourists into the system. And you can see that's exactly what happened in Europe. And when people started sort of traveling between the countries and they sort of relaxed some of the levels, the consequences thereof were very evident and very quickly evident too. So again, we're in level 1 lockdown in South Africa at the moment. That doesn't mean that the risk has gone away. To the contrary, what it means is that the health department is in a far better position to be able to manage anybody coming into the system. So, as the citizens of the country, we still need to safeguard ourselves against that. And what's happening in Europe is a strong possibility that it could sort of manifest itself in the South African context in the next few months to a year.
Now, bringing things back home, let's talk about how when the hard lockdown hit in, March, April this year, a lot of institutions were offering consumers the option of payment holidays and just giving them a break or a reprieve when it comes to repayments. But then that's sort of come back now. What happens to the people who can't now afford to repay their insurances or life insurance, for instance?
Yeah, so I think in that situation as well, I mean, we understand the compounding effect of interest, and unfortunately, in the context of financial markets of South Africa, there's no free holiday. So when insurers and banking institutions provide these holidays, it's on the basis that it will be accumulated at the end of the event, and a lot of folks are not going to have that opportunity to do that. So I think what we will see is these institutions and obviously through some government initiatives, relaxing that demand in terms of trying to recover that, and maybe extending that holiday, extending the period for people to consider their actual ability to repay that debt or repay those loans or repay those sort of holidays that they had benefit of during that hard lockdown.
And those payment holidays, would that be a bad thing or a good thing that happened to consumers? I mean, was it much needed?
Oh, absolutely. So, we saw, in terms of the lockdown, in fact, at one stage there was, we were, I think, bordering on the basis of a shutdown in terms of the economy, and the impact was significant across the board. So I think, absolutely, if there was opportunity, and I know a lot of people did take the opportunity just to sort of relax their cash flow, because, as we know, cash is king. Unfortunately, a lot of the retailers didn't sort of heed the request from government in terms of inflating prices and everything that went with it. So consumer was very, very hard hit, and I think in general the fact that the financial institutions and the insurance industry sort of contributed towards helping those people, I think was definitely a requirement and well met by the consumer.
All right, Martin Rimmers, we'll leave it right there. That's Martin Rimmers, the CEO of Sirago Underwriting Managers, talking to us about financial security during uncertain times.